Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then kind of bounce around the market and look for something to trade. Well, we had a bit of a down move on the last couple of days of the week last week, so that was nice to see a bit of volatility, as you can see here, kind of come back in the market. We'll see how long it lasts, because essentially, really hasn't changed much over the last, let's say, month or so, right? I mean, it's bounced around this area, but really, in the grand scheme of things, not much is going on. It's at all-time highs, and it's pretty much sticking around there for now. We'll see. This week's going to be a potentially big week because the Fed is meeting, and who knows what the outcome of that meeting is and how that will affect the market. But that is potentially something big that could cause volatility to pick up in the market. But we'll know that. I think the meeting's Tuesday and Wednesday, so we'll know that by Wednesday. Anyways, this is the S&P 500. The Nasdaq again looks fairly similar. And of course, the Russell is the only one that looks slightly different, but it's really pretty much at this point caught up as well. It looks kind of the same as everything else. So what are we going to trade? Well, there's not a lot of volatility in the markets. We got to look hard for it. We're going to go to XHB, which is an ETF for home builders. And you can see this thing's been on a pretty much steady climb for the last 6 months. But the key here is volatility is pretty high. You can see if we go all the way across, you can see it's on the high side. There's only a few spots here and there where it's kind of bounced above this. It's at 47, which is pretty high for this market. You know, everything's around the 10 or 12 or 20 mark, so 47 is high. Now, a couple things on this one. We're going to go to the trade page. We're going to go here to, let me see which one did I do real quick. May. I'm going to show this in a sec. So we're going out to 60 days. This says 61, so on Monday it'll be 60 days. And the reason is XHB is not very liquid. So the most liquid options are going to be in the monthly expiration cycles. Generally speaking, weeklies are not as liquid as monthlies. So because this is not very liquid to begin with, we're going to go out to this one. It'll be 60 on Monday, which is perfect. And I'm going to show you a couple things. First off, because the markets are closed, we don't get any accurate numbers. You can see on this particular stock, these numbers, look at these, $3 to $7, right? That means nothing to us. We really have no idea what the price is for these options. So we're going to have to figure that out come Monday. But I've already set this up as a starting point. And you can see what I've done is I've gone, this is 105, I've gone $7 up and $7 down. So how did I pick that as a starting point? Well, on this platform, if you go over here, here's the option cycle. But if you go like way over to this side, you'll see over here, this thing, it says plus or minus 9. What does that mean? Well, that's saying that the market is expecting the stock to move up or down $9 over those 60 days. Remember, that's the range. Obviously, it's not going to, it could close outside that range, it could close well inside that range, but the market is expecting it to move up or down $9. But again, the markets are closed, so this number isn't accurate either. So all I'm doing is starting at roughly what I think the real number might be, which is around 7 or 8. So I'm just going to start at 7 and go from there. But that's how I kind of got the range. It's telling me 9. I know the market's closed, and you can see these numbers are way off. So the numbers are all off everywhere. So I'm just going to say really this is probably around a 7-ish kind of number. Purely a guess. We'll find out more on Monday. But what we're going to do Monday is we have to do our own price kind of discovery. Because the markets are closed here and we can't tell what the price is going to be, again, that's how I got my starting point. We're going to go come Monday, if the market opens up right here, we're going to go $7 up and down, and we're going to create a $2 wide iron condor, and we're going to go from there. We're going to look at the credit, and if it's too small, meaning like it's less than 66 cents, we're going to look to bring these sides in closer, which means I'm going to go from 112 to 111, 98 to 99, basically shrinking the range. If this number is way too big, let's say it says $1, then I'm going to go further away. I'm going to move this out to 113, 115, and this down to 97, 95. That's how we're going to adjust this come Monday. So this is a good lesson for you. You're going to have to play around with these strike prices until you get to a credit that's in our range of 66 to 80 cents. So that's our trade for Monday. It's an XHB. This is how we're going to figure out how to make the trade on Monday, because you're going to have to do this on your own, because again, these numbers are going to change drastically when the market opens, but that's how we're going to do it. We're going to start $7 up and down and then adjust as we need to make the credit fit our rules of 66 to 80 cents. And that is our trade again in XHB for Monday. One, I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day one being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is, to me, the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.